Welcome to TaxLawGH and welcome to our exam video series. In this particular question, we solve a complete exam question from the Institute of Chartered Accountants, Ghana. So this was from their May 2018 exam sitting. This was from their final level 3 tax paper. Now, in this question, to be honest, this is perhaps the single most important question you must at least attempt before you write any tax exam that has some element of company income taxation. So we are going to treat company income taxation, or what some people choose to call examination of accounts, right? So this is a very common area. It's tested in most exam questions. You need to take a look at this question. You do yourself a lot of harm if you don't go through at least this question before you sit any tax exam. So let's start. As usual, I'll take the question. I will break the question down to the barest level possible. I'll tell you why what is what. I will tell you how I arrived at my answers, and then we'll solve the question together. So by the time we are done with this entire video, you should be a pro, and your knowledge level when it comes to company income taxes should have increased by an appreciable margin. So let's start. As usual, and in line with best practice that I always recommend, for every exam question, read the preamble and then you read the requirements. So what does the preamble to this question say? It says Sechiwa Anam Industries Limited manufactures. I keep reiterating that in a tax exam, every single word matters. They don't put a word there if it doesn't have an impact. When they say manufactures, what it means here is this a manufacturing company. Why must you care? You must care because so many things affect manufacturing companies. As you see shortly, capital allowance will be impacted because their plant and machinery will be in class 2 instead of class 3. By being a manufacturing company, if they have any losses to carry forward, they can carry forward for 5 years instead of 3 years. So take note, by this one word here, if you miss it, you are going to do so many things wrong. Take note, we are dealing with a manufacturing company. Also, as a manufacturing company, one thing you need to know is that they are entitled to certain locational incentives. So if they are located in certain parts of Ghana, their tax rates will be different. So if you miss this, you've already lost 3 things and you are on your way to getting the question wrong. So please take note of every word in the tax question. Here, they said it's a manufacturing company. They manufacture personal hygiene soaps and related products at their factory in Takoradi. We know Takoradi to be what? A regional capital. Being a regional capital, it will be subject to a special locational incentive. So for quick revision, remember we said that the general company income tax rate is what? 25%. If you're located in a regional capital outside of Accra and Tema, you get a tax rebate, which is what? 25% of this 25% rate, right? And then if you're located in any other part of Ghana outside the regional capital, your rebate will be 50% of this 25% rate. What does this mean? It means if the business, this same company, the question said Accra or Tema, instead of Takoradi, you would have used 25%. Because it's in Takoradi and Takoradi is a regional capital, please be thinking about using 25% of 25% because they get a rebate of 25%. So effectively, what it should be actually 75% of 25%. Because if you're given a rebate of 25%, it means you need to pay what? The remaining 75%. What this effectively means is that for this company, their tax rate will be 18.75%. So imagine number one, you missed the fact that they were in Takoradi. You'd have got the rate wrong. If you missed they were a manufacturing company, you would have even used 25%. But let's say they were not in a regional capital like Takoradi, you'd have used 50% of 25%, right? And that, the rebate would have been 50% of 25%, and that would have given you a final tax rate of what? 12.5%. But that is not our concern here. what we are going to focus on really is this rate of 18.75%. So take note, we only got to derive this because we know, number one, they are a manufacturing company, and number two, they are located in a regional capital. So take note of this information. All right, they commenced business on 1st April 2016. So here again, what do you need to consider? Since they commenced business on, or not at the start of the year, but sometime within the year, ask yourself, what will be the impact on capital allowance? Because under capital allowance, if you remember, as we'll see shortly, there's a formula: A times B times C over 365. This C over here is the number of days in the basis period of the entity. And for a company that has commenced business, the C will vary based on when they started business. So please take note of this. We've not seen the requirement yet, but if it's there, this is something you need to be thinking about as you solve the question. Also, they said the company had an assessed loss of 150,200. Being a manufacturing company, they can carry forward their losses for 5 years. And it's because the income tax regulations, LI 2244, lists them specifically as part of the priority sectors. So you can see in the preamble alone, we have gleaned a lot of very valuable information. And still on the preamble, the company recorded a net profit, so they're in a profit position, of 762,800, okay, for the year ended 31st December 2017. Take note, their loss was in 2016, so we may have to carry forward to 2017 because they have a profit in this particular year, right? Take note of that. After taking into account the following transactions in the income statement. So, okay, we know they have a profit of 762,800 after they took account of a number of things. They have a loss. They started business within the course of the year. They're a manufacturing company and they're in a regional capital. What is the requirement? Let's scroll down. So, requirement number 1 is for 8 marks, calculate the capital allowances claimable by the company for the year ended 31st December 2017 using all the available information. But obviously, before you can compute capital allowance 2017, you need to do that of 2016. So they are giving you extra work. That's why it's for 8 marks, right? So we will need to compute capital allowance. And like I said, the fact that they started business within the course of the 2016 year of assessment is very crucial. If you miss that, you're in deep trouble. II is to compute or calculate the chargeable income, number 1, of the company and the tax payable, number 2. So it means the rate of tax will matter, and that is for 6 marks. In total, you have 14 marks from this question. I think it deserves more than 14 anyways, but 14 marks is still a lot of marks to gain an exam. This can really push you way beyond the failing threshold and ensure you pass your exam. So we know the requirement. First is to compute capital allowances, and then next is to compute chargeable income of the company. So now that we know the requirements, let's go through the question. My preferred approach is to read the whole question. Let's annotate. Let's break everything down. When we start writing, then we know we are writing, right? Okay, so they said, back to this, their net profit of 762,800, this figure here, was arrived at after taking into account the following transactions. So it means all of these things we are going to see shortly have been factored into or have been taken into account at arriving at this profit figure. First item, they are saying gross rental income of 180,000 received from the leasing. So essentially they rented, right, of one wing of the office building. The rental income portion constitutes 10% of the office building. Take note, all these transactions here happened in 2017. So take note, it's within 2017 that these transactions happened. So gross rental income of 180,000 received from leasing or renting one wing of the office building. The rental income portion constitutes 10% of the office building. What this means is that if in 2017 they started renting out the office and they have rented it out to someone under a lease, then the portion of this building, the 10%, must no longer be in their books for capital allowance. But don't forget that in 2016 they were not renting this building out. So they'll get capital allowance on the full amount. But in 17, we need to reduce capital allowance by this 10%. I'll show you how to do that. Then the gross rental income. Rental income is subject to withholding tax in Ghana. When it comes to rental income, there are two main approaches. It's either you go the commercial property way or the residential property. Here, it's definitely a company, so they are hiring it out for commercial property purposes. So if it is residential property, then the rate would have been 8% withholding. If it's commercial, it would have been 15% withholding. Because it's commercial and because this is not their business income, the 15% withholding tax will be a final tax. Final tax. It's not a tax on account. And because it is a final tax, all we need to do is we'll treat it differently. Final taxes fully satisfy their tax liability at the point at which they occur. And just in case you haven't watched any of our videos on company income tax and business income tax, we have covered every single principle I'm talking about here in those videos. So at least get the foundation. If you are lost anywhere, every single thing I'm doing today has been covered somewhere. Withholding tax, I've covered withholding tax on account, final withholding tax, and all of that. So take note, rental income, commercial property, it is not their core business. It is just other income for them. It's just investment income for them. So here, it will be 15% final tax. So take note when we start solving, I'll show you how to treat this. All right. The next is net interest received. Obviously, net means what? They receive the amount after deducting taxes, right? So net interest received on bank deposit from Ghana Commercial Bank of 10,028. This figure is net of taxes. So it means what? What this figure represents is after they have deducted the 8% withholding tax on interest. This is why I told you this question is arguably the best you could ever attempt. At least make sure it's one of the things you solve before you sit any tax exam. So this 8% withholding tax on interest is not a final tax. This is a tax on account. Unlike dividend withholding tax is final, but interest withholding is not a final tax. So if you know this, then you know that if it's on account, it means we need to include the gross amount. So we need to gross this figure up from the net to the gross amount, add it to the company's computation, tax them at their corporate tax rates, and then we give them a credit or a withholding tax credit for the withholding tax 8% already suffered, right? So what we'll do here is, I'll show you, we take it out, we gross it up, we add it, and then we give a tax credit or a tax relief of how much they've already paid in withholding taxes on this interest amount. So here they are confirming that withholding tax of 8% has been deducted. Okay, so just in case you didn't know the rate, here they are helping you out. The examiner is being kind, which is not too frequent. So take note of this. Next thing is that, so let me do this. Let me highlight all the figures I will need so that we can find them easily. So we know our loss is 150, 200. Net profit is 762, 800. We'll pick this up very soon. What else? They started on 1st April, good, 2016. Gross rental income, 180,000. It is 10% of the building. Net interest received is 10,028. All right, so let's continue. Okay, the next is the registration of trademarks. Anytime you see trademarks, copyrights, patents, what comes to mind? Intangible assets. Intangible assets. If it's an intangible asset, then under capital allowance, what happens? This will be under class 5. right? So once again, why I say this question is so good is you get to learn capital allowance and the principles of business income tax in one question. So if it's class 5, class 5, the capital allowance rates will be what? Based on the useful life of the intangible asset. So here, you say we have some trademarks at a cost of 75,000 cedis. So there's a cost 75,000. All right, so these are for trademarks. In respect of the company's personal hygiene soaps, that is to last for 10 years. So good. This 10 years is the useful life, and that is what we'll use to do capital allowance for class 5. Remember this. Then the research and development expenses incurred in connection with these soaps amounted to 15,000. Once again, if you've watched our business and company income tax series, we mentioned clearly that research and development expenses are deductible. They are deductible expenses, or what some people will call allowable deductions. So please, we are not going to disallow this. The amount is valid. The amount is wholly, exclusively, and necessarily incurred, and the law specifically provides that research and development expenses can be deducted whether or not they are of a capital nature. So this 15,000, we are not going to add it back. We're going to allow it as a deduction. Remember that? All right, and the company intends to expense it, so they are right. Then legal costs incurred to complete the registration of the trademark was 5,000 cedis. Now, when it comes to things like this, if you need to incur any cost to make an asset ready for its intended use, this is an accounting principle I'm borrowing, then you need to add that cost to the cost of the asset. Let's leave accounting, let's come to the Income Tax Act, Act 1896. It says that the cost of an asset includes other incidental costs that what must be incurred as part of what? Gaining or getting the asset or acquiring the asset. If they had to necessarily incur legal costs to register the trademark for its intended use of 5,000, then this 5,000 will be added to the 75,000 to get the total cost of the trademark. So our trademark will be 75,000 plus 5,000 because the legal cost will be added to the cost of the trademark. And once again, we cover the concept and what goes into cost of an asset in our videos on, I think it was on the taxation of gains and gifts. Yes, that series. I think it was 2 or 3 videos. So if you watch that, you also covered. So we'll add the legal cost to the cost of the trademark and we'll grant capital allowance on the total figure. We will not expense the legal cost. Take note of this. The next is a donation of 120,000 cedis. So Section 100 of the Income Tax Act provides for donations and contributions to a worthwhile cause. So they made a donation of 120,000 cedis worth of furniture to a local government assisted school as part of the company's corporate social responsibility program. This was duly acknowledged by the Ghana Education Service. So, dear viewer, what we can say about this 120,000 cedis donation is that it's an allowable deduction or it's an allowable donation. Remember, there's a provision that all of such donations that are to a worthwhile cause or that are approved by the Commissioner General or that are seen to contribute in some way to society's benefit, in addition to others that are listed like sports development, sports promotion, urban, rural development. But something like this, if you donate to a school and they are saying clearly that the Ghana Education Service, the GES, has acknowledged this, then come on, this is allowable. So we are not going to disallow this expense. We are going to allow it as an expense. And why am I saying disallow, allow? Some may not be aware of what that even means. When it comes to tax, so let's go back to the basic principles. When it comes to tax, expenses or expenditure will be allowed as a deduction. What it means is you can reduce your profits by these expenses before you pay tax on the difference. Will be allowed when something happens. It will be allowed when occurs. What do I mean? It will be allowed when occurs. What does when mean? When means wholly, exclusively, and necessarily. So when an expenditure is wholly incurred, it's exclusively incurred, it's necessarily incurred for the business, then it will be deductible, subject to other rules that pertain to specific deductions. So once again, if you want further explanation, we've covered all of this in the Business and Company Income Tax video. So not to waste anyone's time, let's continue. So donations are deductible. Here, GAS has approved it, so they can deduct it. Depreciation of fixed assets of 57,000 will not be allowed. The law has clearly stated depreciation as one of the domestic unexcluded expenditures. If you're interested, I think can be found in section 130 of the Income Tax Act. So this 57,000 here, we need to disallow it, right? We will need to disallow this 57,000. It is clearly listed in the law that it's an excluded expenditure. You cannot get a deduction for this. So depreciation will be disallowed, right? So we can write DA here. And even do DA by all the ones that will disallow. What else has come up? I think this is so far. Yes. All right. The next is replacement of 2 motor vehicle engines costing 51,000. Now, when we say replacement, this brings to mind something called repairs and improvement expenditure, or what some people shorten to R&I, repairs and improvement. Once again, this is why I love this question so much. So many topics in one, and it's a perfect question. Repairs and improvement expenditure can be deducted as an expense. However, the amount of repairs and improvement expenditure deductible shall not exceed 5% of the written down value of the pool to which that assets, to which the expense is made, belongs. Any excess expenditure above that 5% threshold will be disallowed and added to the pool to which it relates for capital allowance purposes. What this means is that this 51,000, we need to find which pool it relates to. They said it's for motor vehicles. So it means it relates to what? Class 2 for capital allowance purposes. So I will subject this 51,000 to the repairs and improvement analysis, and we will find that some portion can be deducted. The part that cannot be deducted, I'll add it to the class 2 pool and compute capital allowance on that. So take note of this. The next is, they said they incurred exceptional cost. Anytime you see something like this, raise your eyebrow. Most certainly contains something that shouldn't be there. So exceptional cost of 150,000. All right, as a result of the production manager sustaining an injury whilst working on one of the production lines in the factory. The production manager was rendered incapacitated and he resigned as a result of the incident. 35,000 of the cost was paid to him as severance pay, right? So here, there are many ways to treat it. You can go under the severance pay provision, but that was even under the repealed Internal Revenue Act. Now the law causes redundancy pay, so there are some people who argue that it will not fall there. But Section 7 clearly lists that an amount paid to someone as a compensation for such injuries incurred will be exempt from tax. So really, this amount here, we're not going to disallow it. We'll allow it to pass through the book. So this 35,000, which was paid to him because he was hurt and he was being sent away from the company, you are not going to disallow this and tax it. Sometimes tax has a kind heart, so this amount will be allowed as a deduction. So take note of it. We will not add this figure back. The next is 110,000 cedis was used to acquire additional computers. So here clearly we are talking about the concept of capital and revenue expenditure. Here they've incurred capital expenditure, right? They've bought a depreciable asset. So we need to add this 110,000 to class 1, which is the pool for computers and data handling equipment together with their peripheral devices, which will be subject to capital allowance at 40% on a reducing balance basis. So we will add this 110,000 right here to our class 1 pool of assets, and we grant capital allowance on that basis. So remember, we disallow, add it back, and then we grant capital allowance on it instead. The next is they said the remaining 5,000 cedis of the cost represents fines. So let me even do it this way. 5,000 cedis represents fines. If you've been fined, once again, the law is clear. Any fine you you are liable to pay as a result of breaking any law is to be disallowed. The law calls it an excluded expenditure. You can find this under section 130 of the Income Tax Act. For those who don't want to bother about the law, we've covered this clearly in our Business and Company Income Tax videos. So this 5,000 cedis cost, which represents a fine imposed by the Factory Inspectorate Department following the incident, will be disallowed. So we have to disallow this. So all they are saying here is that their regulator or their factory inspectorate department give them a fine because they probably didn't do the right thing. They didn't make sure their health and safety measures were adequate enough, and they ended up hurting an employee. So they were given a fine of 5,000. You don't expect the tax law to allow you to get a deduction for this. You have done something wrong, and we need to punish you again on the tax side. So all fines for doing something wrong will be disallowed. If you write an exam and you see a question on, let's say, someone incurred a fine for breaking a traffic rule or for a traffic offense they committed, once again, that will not be allowed. Will be disallowed because any offense you commit for which you are fined, any fine, any penalty, any fee will be disallowed. Great. The next expense they incurred, which is sitting in their income statement or their profit and loss, is they bought a computer server for accounting and human resource needs as a cost of 20,000. So this 20,000 cost, you all agree with me that we need to what? Disallow and grant capital allowance, obviously, to go to class 1 because it's a server. Server is hardware. There are people who think that when they hear server, it's a software. No, computer servers are hardware, which obviously connect network cables, network devices, run an organization's network infrastructure, and all of that. So this, we need to add it to class 1 and grant capital allowance on that basis. So these are the things we need to consider. And let's see what else we have here. Let me see. After this, we have the requirement. Perfect. So we can start very soon. Then they give us additional information or about the assets. So they are saying details of companies' other fixed assets at cost, very important, are provided below. These were all acquired or constructed during the year to 31st December 2016. This is very crucial. It means that when we are doing our apportionment for capital allowance, the C over 365, we need to consider all of these assets, right? So now let's do the allocation of classes. An exercise I love to do. Factory building. You all agree with me, it is what? Class 4. Plant and machinery. And once again, because they are a manufacturing company right here, right? Their plant and machinery will be class 2. So if this same question, they didn't say manufacturing, but they said retail, you would have put the plant and machinery in class 3. Take note. So plant and machinery used in manufacturing is class 2. All other equipment, all other machinery will be class 3 if it's a manufacturing company. Office building, once again, this also go to class 4. I'm not going to waste too much time on capital allowance because it's a separate topic we have covered. I have solved an exam question on capital allowance in this playlist, so look for that. I actually took time to explain the classes and what rules apply. So let's not waste too much time on that. I'm assuming you know, but I'll run you through a summary just so you are okay. Furniture and office equipment, this should be class 3. Motor vehicles are clearly class 2. Computers are clearly class 1. So now that we have our classes and we know the requirement, let's start. First thing they said we should do is to calculate capital allowances claimable. All right. Now, if you remember, this is a type of question where I may need to do two things concurrently. What do I mean? You remember that there's repairs and improvement expense. Luckily, the repairs and improvement was incurred in 2017. So it means I can do the 2016 capital allowance in peace. But before I complete my 2017 capital allowance, I need to take advantage or take a look at the repairs figure. So let's be careful. I'll need to open the templates down as we start and have a lot of space around so that I can maneuver. So as we start, this was question 2A in the exam. The examiner complains bitterly that students do not follow simple instructions like writing the name of the company and what you are doing. So please, let's do it. The company is called Sechi Wa Anam Industries Limited. Please, in the exam, don't write LTD. I can do it, you can't. All right, so the first thing we're required to do is what we say computation of capital allowances for the 2016. Remember, they said they want 2017, but we need to do 16 before 17. So for the 2016 and 2017 years of assessment, then you underline it neatly. All right, so we can start with 2016. Obviously, to do capital allowance, we have an idea that we have class 1, we have class 2, we have 3, and we have 4. In fact, we have 2 4s because this is, we can make this 4A and 4B. And I'm saying this because you should be aware that class 4 is on a straight line basis, right? So we need to have separate pools for that. Then if I remember, we also had what, an intangible asset. So we need for class 5. So I might need how many? I'll need 1, 2, 3, 4, 5, 6. I'll probably need 6 different columns. So let me see how I can squeeze that here. Let me make use of the real estate. Good. So class 1, class 2, class 3, class 4A, which I will give to the factory building. Then class 4B, which I will give to the office building. Then I have my class 5. I think we have just one class 5, do we? Yeah. Then I can have a column for totals. I squeeze everything. All right. So here, as usual, typically what you should start with is your written down value brought forward. But in this question, we don't have any. But let's still do it anyway. So typically, you start with, written down value brought forward. It is nil for all my classes because I just started. So let's even use the rate so we are where class 1 is 40% on a reducing balance basis. Class 2 is 30% on a reducing balance basis. Class 3 is 20% capital allowance on a reducing balance basis. Class 4 is 10% but on a straight line basis. Class 4 again, 10% straight line basis. Then class 5 is on useful life. Here we know it is what, if I remember, when is it? Yeah, right here, it's 10 years. Seen it? So we use 10 years. Right? If you're following, please just try to see what I'm writing. Okay. Then we have what? Our additions. So let's begin to look at what assets were added in the year. So obviously for class 1, in the first year, what we can be very sure of is what was added. So let's ask ourselves, this was the only asset in 2016 that was class 1. Remember that all the things up here in this question occurred in what? 2017. How do I know? How do I know? They said the company recorded a net profits for the year ended 31st December 2017 after these transactions, right? So it means clearly everything here happened in 17. So it means I can be happy that at least my computer figure of 30,000 here was in 2016. So I add my 30,000 to class 1, 30,000. Need a bigger screen. Good. Then class 2. So let's even these things down here. For class 2, what and what do we have? You can see class 2, I have what? This figure 130,000 and then what? 510,000. So the plant and machinery, because it's a manufacturing company, and then the motor vehicles of 130,000. Now motor vehicles, be careful. Here they've told us it is goods vans. So the law says commercial vehicles are not restricted, right? And if it's not a commercial vehicle, then it would have been restricted to 75,000. The law mentions that if the vehicle can carry more than 13 passengers, then it is what? A commercial vehicle. So here, a goods van, a van clearly can carry more than 13 passengers. So we will not restrict this 130,000 to the 75,000 restriction. If not, if they said Toyota Camry, Toyota Corolla, then we would have what? Restricted the 130,000 to 75,000. I mean, by restrict, I mean you won't add the whole 130, you only add 75,000. But here, because it's what? A van, more like a bus, you're going to allow the whole amount. So I'm going to add 130,000 here to 510,000 here to get my total class 2 additions for the 2016 year. So where's my calculator? I have 130 plus 510. That gives me 640,000. Good. Let's go to class 3. What did I mark as class 3? If I remember, it was just one asset, which is what? Furniture and office equipment. So I put here, and that figure is 60,000, so I put here 60,000. And oh, just in case you don't know, I've already put a link to the question both in the comments and in the description box, so you can download the PDF and do it yourself later, but follow through and make sure you understand. All right, so let's come to the class 4A, which is the building, right? Class 4A, factory building. How will I approach this? The cost is here, 800,000, this one. So I will put 800,000 here. Class 4B, office building is 420,000. So that will go into another pool. Remember that both of them are buildings. Both of them are class 4. But because class 4 is on a straight line basis, I put each class 4 asset in a separate pool of assets. So 420,000 will come here. All right. Then, if you remember, the trademark was bought in 2017. So there will not be any trademark in 2016. I put dash here. All right, now that we have the additions, at least we know on what basis to compute capital allowance, right? So let's do this. Let's create a sub. So this will not change. 30,000, 640,000, 60,000, 800,000, and 420,000. Now let's compute our capital allowance. This is where you need to take a break. Like, hold on, all right? If you begin to pick the rates and apply them directly, you get them wrong. Remember that the question said, let's come back here. This is where many students will get it wrong. They commenced business operations on 1st April 2016. So we need to apportion the capital allowance computation according to the number of days in the basis period. So please take note, we need to do this apportionment. So let's come back to the question. So here, capital allowance, I need to work for it. So let me leave some space. I'm sure I will need, you know what, in your exam, find a way to work around this. But let me leave some space for capital allowance here. You can scroll down. Let me see, this will be a line. I think I'll need enough space. So let me create my workings here. All right, so we know capital allowance equals A times B times C over 365. If you don't know where this is, please watch the capital allowance videos. We've comprehensively covered this. The law is clear. A is the cost, B is the tax rate or the capital allowance rate, sorry, and C is the number of days in the basis period. If someone started business on 1st April 2016 and their year end is 31st December 2016, how many days do we have from April to December? There's a simple way to do this. Some people will count their feet, count their fingers. Why don't you just do January, February, March and subtract from 365? And take note, this is not where you're going to do your whole, it's a leap year. Yes, I know 2016 was a leap year, but your denominator is 365, not 366 or 365 one quarter. So stick to the normal 28 days in February. Before you go and do I know, and you get it wrong. So January has 31 days. February has 28 days. March has 31 days. So 31 plus 31 plus 28 will give me 90 days, right? So if I subtract, so I have 365 days in a year minus 90, this will give me, so minus 365. This will give me 275. So my C is 275. So you write here C equals 275 days. Obviously, you'd have done this working for the examiner. All I was trying to do was say that if I started business in 1st April, so it means from April to December 2016, how many days are there? That's what I'm trying to do here. I'm saying somebody would have added April, May, June, July, August, September, October, November. That's very long. In an exam, you're trying to be efficient. So why don't you just add January, add February, add March, and then subtract that sum from 365? That's a faster way, right? That's what I did here. So I'm saying January has 31 days, February has 28 days, March has 31 days. When I sum, it gives me 90 days. I take my 90 days from 365, then I get 275. So I know my C is 275. With this in place, let's start the capital allowance calculation. So my capital allowance for class 1 will be A. What's the cost? We know it's here. From here, it's 30,000. So 30,000 times B is what the rate, which is what 40% from the top there, times C, which we now know to be 275 over what 365. So this will give me my capital allowance. Let me do the math here. 275 over 365 times 40% times 30,000. This will give me 9041.095. Let me just 0.10. Right, so this is my capital allowance for class 1. So I come here and I write what 9041.10. So I can even do the working straight away and get my written down value carry forward. Okay, so let me do this now that I'm here. So 30,000 minus 9041.1 gives me 20,958.90, right? Okay, so let's go to class 2. So same approach, right? So class 2 equals, what's the cost? From here I can see 640,000, right? So this is what I mean. This 640,000. So it's 640,000 times, what's the rate? 30%. It's up here. This right here, 30%, right? So 30% times, we know it's C is going to be 275 over 365. Please, if you get the C wrong, you are going to get so many things in the question wrong. So please make sure when they mention they started business in that year, you take note of that. So times 0.3 for 30% times 640,000 gives me 144,657.53. Okay, so this gives me 144,657.53. Okay, so I deduct this from my 640,000. Then it gives me 495,342.47. Okay, let's do class 3. It's long, I know, but you need to do it. Class 3, the cost is what? 60,000. So once again, 60,000 times what's the rate? 20% times 275 over 365. So it becomes 275 over 365 times 20% times 60,000 gives me 9041.10, rounding off because my calculator gives 0.9589 whatever. Okay, so I have 9041.10. Okay, so this minus 960,000 gives me 50,958.90. I'm running out of space, but we'll figure it out. Okay, so let's do class 4A, the first one for buildings. Class 4A. What's the cost? 800,000. So it's going to be 800,000 times the rate of what? 10%. Once again, times 275 over 365. So 275 over 365 times 10% times 800,000 gives me 60,273.97. So 60,273.97. Okay, this I need my written down value, and that's 800,000. Somebody may ask, why am I doing written down value? Because I'll need to do 2017 and I need those numbers, so you might as well just do it now. This will give you 739,726. Okay, let's do for the last one, class 4B. So class 4B will give me cost is 420,000. So 420,000 times 10% times 275 over 365. So 275 over 365 times 10% times 420,000 will give you 31,000. Did I write it here? Okay, so I was reading my calculator. 31,643.84. So 31,643.84. Okay, what's my written down value? So minus 420,000 will give me 386,356.16. Okay, so I can put dash here for. Let's add the capital allowance 2016. So I'm going to sum this 9,000 here, this 144 here, this 9,000, this 60,000, and this 31,000. That'll give me total capital allowance for 2016, right? So let's do that. 9041.1 plus 144,657.53 plus 9041.1 0.1 plus 60,273 point, what did I get? 97, okay. Plus 31. Is this 643? I can't see. Okay, yeah, 31,643.84. I have what do I have? I have 254,657.54. Let me take that again. So I have 254,657.54. So this would be my capital allowance for 2016. Okay, now let's go and do 2017. So we can set up our workings here. So I have two options really. I want to clean the workings so that I can continue, right? So I'm sure by now you should have written them down. So let me save space here by cleaning all of this. I don't think I'll need any of the figures. So just take note of how we did the C over 365, right? It's only relevant in the year of commencement, and take note also in the year of cessation. If they tell you the company ceased the business in that year, you also need to do this thing. So check if the question says you commence business or you cease business in that year, then you need to apportion the C. Apart from that, every other full year, the C will be 365. So it will be 365 over 365, which will give you 1. All right. So let's do 2017 now. So we can just do written down value brought forward, and we bring down the balances here. So we bring down 20,958.90. We bring down 495,342.47. We bring down 50,958.90. We bring down 739,726. Is it 26? I think so. Bring down 356 point what? I think it's 0.16. Okay, so let's go and see which assets were 2017 assets that we need to use for capital allowance purposes. So let's run through. I think we did our markings. We know where to pick what. If you remember, they bought trademarks from here, right? At a cost of 75. They incurred legal costs of what? 5. So I said total trademark cost would be what? 80,000. So this is class 5, this line. We have here our additions. So let me add 2017 additions. We have trademark of what? 80. Oh, sorry. I think that's the wrong. That should be in this class 5. Okay, then it means this one stole this guy's. So 0.16 10-year lane. So class 5 will be 80,000 right here. Let me even write the classes again so we are not confused. Class 1, this is class 2, this is class 3, this is class 4, another class 4. So this is A, this is B. Good, and this is class 5. So no written down value, good. All right, so we have brought in the total intangible. Let's see what other additions we have in the question. Donation, no. Depreciation, no. Good. Remember the replacement of 2 motor vehicles? I'll come to that shortly, right? But let's pick the ones that are clear additions. Exceptional cost of 150,000. Production manager. Good. Do you remember they said 110,000 was used to acquire additional computers? So this will go to class 1. And then if I remember, this one to go, they bought a server for 20,000. So we're going to add this 110,000 and the 20,000. That'll give us, I think, 130 to class 1 for 2017, right, as additions. So we come here, we add 130,000, which is the sum of the computers they bought and then the server. That will be our additions for our class 1 in 2017. All right, now let's look at the repairs and improvement because I told you to impact your capital allowance, right? So let's come here. They said there was replacement of 2 motor vehicle engines costing 51,000. The rule in the law for repairs and improvement expenditure is that the expense, which is the 51,000, should not exceed 5% of the written down value of the pool at the end of the year. So it means this class 2 pool here, this class 2 pool, we need to find the written down value at the end of the year, find 5% of it, and then restrict it. But someone will ask, how can I find the value of something that I am not yet at? I'm not at the end of the year. So we need to go and work on the assumption that we have the year end figure. We work backwards, get the amount allowable, and then we come and add it. What do I mean? Let me show you. So the law is clear. It's 5% of the written down value of the pool at the end of the year, not the start of the year. So let me do the working here. So, oh no. Repairs and improvement working. So the law says what? 5% of written down value of pool at the end of the year, right? So it means we need to work for a hypothetical year-end value. If it's motor vehicle, then it's class 2. So it means that class 2 pool, what is the written down value brought forward? This is why I think you get the most value. I want this item, I want you to understand this very well. We had what? 495 here. So 495, 342.47. This figure, this one. Because it's motor vehicle engine, it will be in class 2. So I need to bring class 2 balance, right? Then I will compute capital allowance as usual. So capital allowance. Remember class 2 is what? 30%. Okay, so it's going to be 30%, 0.3 times 495, 342.47. That will give me 148. 602.74, right? With this capital allowance figure, I can now find the written down value carry forward. Remember the law says what? It should be 5% of the written down value of the pool at the end of the year. So I need to do this math first, get that, do the 5%, and then do the restriction, right? So this is where I think you need to really watch it carefully. So it becomes 495, 342.47 minus 148, 602.74. This will give me 346,739.73. So this figure right here is the value of my written down value for class 2 at the end of the year, without including the repairs and improvements, right? So this will be my basis. Then I'll say, let's find 5% of written down value of pool equals what? 5% of this figure of 346,739.73. What does it give you? Times 0.05. This gives you 17,336.99, right? What this really means is that my repairs and improvements cannot exceed this figure right here. The law says cannot exceed 5% of written down value of the pool. So technically, the allowance I will be getting is 17,000. But if the question says they've already, let's come here, watch this figure here. The engine replacement is what? 51,000. So it means they have already incurred 51,000. We need to only allow the difference, or we need to really allow 17,000. Then the excess will be capital granted as capital allowance. So what do we mean? let's say total expense equals what? 51,000. Amount to be expensed equals what we just got, which is 17,336.99. So the difference will be the amount to be capitalized. So 51,000 minus 17,336.99. Okay, so this gives me 33,663.01. So ladies and gentlemen, it is this 33,000 that will be capitalized in my class 2 pool, and at the same time what disallowed when I start doing the computation for company income tax purposes. So remember, once again, the rule, like I'm saying, tax is always based on principles. Know the principle and you are fine. The principle says that for repairs and improvement expenses, the amount we can deduct, or the amount we can give you as an allowable deduction, will not exceed 5% of the written down value of the pool at the end of the year. End of the year. You've learned that rule. Fine. What happens to the one that is not allowed? The law says the excess above that 5% will be added to the capital allowance pool and you'll be granted capital allowance on that. So this figure we got here, this 33,000 here, we are now going to add it to class 2 as an addition for the year, and we grant capital allowance on that. So 33,663.01, we come to class 2 and we add as an addition. So 33,000. What did we get? 663.01. Okay, 663.01. So you can see how there was no clear addition in the question, but if you didn't know this principle about repairs and improvement expenditure, you would have been in big trouble. You probably disallow the whole amount or say it's allowable. So take note, replacement is what? An improvement or repair and improvement, and you need to what? Subject it to this rule. Take note of this element. Really, it's very important, right? It's a very, very important thing to know. To the best of my knowledge, or from this question we've read, there's no 2017 addition for class 3, so we can put dash here. They didn't do anything to the buildings, so we can also put dash here. So let's find our base for capital allowance for this year, 2017. At least I know class 5 is 80,000. This would be 388,356. This would be 739,726. This would be 50,958.90. Then I need to add these two. Okay, so 933,663.01 plus 33,663.01 plus 495,342.47 gives me 529,005.48. All right, then my class 1 becomes 20,958.9 plus 130,000 gives me 150,958.90. Then I can compute my capital allowance. Take note that here, because 2017 is a full year, I'm not going to do the times C over 365. No, I'll just go straight ahead and apply the rate. So this 150,958 times 40%. Okay, so 40% of my 150,000, 150,958.9 will give me 60,383.56. So this is my capital allowance for class 1 minus 150,958.9 gives me 90,000 575.34. So this would be my written down value carry forward for 2017. So let's move to class 2. It's 30%. So 30% of 529,005.48. That will give me 158,701.64. So my written down value becomes minus 529,005.48. I have 303.83. Let's go to class 3. That is 20%. So it's going to be 20% of this figure, 50,958. 50,958.9. That gives me 10,191.60. Then my class 4, and here please pay attention. Class 4 is straight line, so our rate is not going to be on this reducing balance and figure here. It will be on the initial cost, this 800,000, because class 4 is straight line. Straight line means on the original cost, right? So it's going to be 10% on the 800,000. Take note of that. So 10% of 800,000 is going to be what? Obviously 80,000. Oops. So 80,000. I forgot to get my 10191. So 10191 minus 5958.9 gives me a closing of 40,767.30. My class 4 is 80,000, so it will be my 739,726 minus 80,000. Give me 659,726. My class 4B, this is the office building. Do you remember that right here they said that the rental income portion here, the rental income portion constitutes 10% of the office building? It means that 10% of the office building has been rented out. If they are saying that the rental income portion is 10% of the office building, it means that we no longer own 10%. We rented it out. It's under a lease, presumably a finance lease, unless told otherwise. So it will no longer be in your books for capital allowance purposes. Your lessee, you being the lessor, the lessee will now have capital allowance. So we need to reduce the value of our building by 10%. And by value, I mean the cost, because class 4 is based on the straight line cost basis. So we are going to find 90% of the building and grant capital allowance for that. Don't forget that this transaction occurred in 2017. So in 2016, we didn't grant this 90% because we hadn't started renting it out. So if you come here, you can see that the cost of the office building is what? 420,000, right? 420,000 right here. Now that 420,000 cedis is the 100% value. They are saying 10% of that has been given out for rent. So that's what I mean. Rented part of office building. So cost equals, was it 420? Yes. The cost is 420,000. Rented portion equals what? 10%. So this should give me 42,000. So portion owned should be what? The difference. So 420,000 minus 42,000. What that give me? So I have 420,000 minus 42,000 gives me 378,000. So it means technically my cost base for class 4, this one should be what? My 378,000. Take note. So I'll be doing 10% on this 378 and not the 420 because I'm now renting 10% out, right? So 10% of 378 is obviously what? 37,800. So my capital allowance for this year is 37,800. And take note, it's because of what? The fact that I have rented 10% out. So this capital allowance is on the original cost, 90% of it, right? Okay, so what will be the written down value to carry forward? It will be my 388,356 minus 37,800. That gives me 350. 556. Then for the useful life one, here remember they said the trademark will last for what? 10 years, right here. 10 years. So it's going to be what? 80 divided by 10. Simple. Then you get the cost per annum. So 80,000 divided by 10 to get this last one here, because it's on straight line basis. So 80 divided by 10 will give you 8,000. And this will be my capital allowance for that last class. So obviously this should give us 72,000. So we are done. To find the capital allowance 2017, which we'll need in this question, is what? This 60,000 plus this 158 plus this 10,191 plus this 80 plus this 37 plus this 8. So let's sum them up. 63,383.56 plus 158,701.64 plus 10,191.6 plus 80,000 plus 37,800 plus 8,000. This gives me capital allowance 2017 equals, I have Ghana cedi 355,076.80. So this is my capital allowance for the year that I'll be using in the computation. So you can see, just to get this figure, we went through so much hassle. But the good news for you is that the examiner is rewarding you for having gone through all of this stress, because what they are giving you here, 8 marks. Actually, a lot more marks than the computation of company income tax. So you have 8 marks to do this. It is worth the stress, right? Obviously, in an exam, you go faster than this because nobody will be stopping you to explain this, telling you that. You can do this in less than 5 minutes if you know what you're doing, really. So it's not a big deal. But this was just to break it down. So 8 marks for this. Let's go and do the B part, which just computes the chargeable income and the tax payable for 2017. So we can come back to this later. So let's come here. We are done with the whole stress here. So II computation of chargeable income for the 2017 year of assessment. Okay, so when it comes to computing company income tax, you always start with the profits for the company, or profits before tax, or if it's a loss before tax. So here they said they had the net profit of 762,800. So we start with that. Ideally, it should have been your profit before any taxes. They said net profit, which presupposes it is supposed to be what? After tax, but use what they give you. right? So your net profit, let's have two columns. So Ghana city, Ghana city. So our net profit they gave us from here is here. They said is what? 762 800. All right, then we begin to do our add backs. But before we start adding back, let's deduct some of the things, the income first. So let's some two things. Remember, gross rental income. What did I tell you about this? I said it to suffer what? A 15% final withholding tax. So because of that, we need to take it out of our determination. So we less our gross rental income. The figure is what? 180,000. So 180,000. We less this. The next we will less, if you remember, is what? The interest received. It will be subject to what? An 8% withholding tax, not final, on account. So we will less the figure they have included, only to tax it later. So let me just take it out from here. So interest on bank deposits. What's the figure? 10,000 from here, right here, right? So it's 10,000, 028. So let's add these two together. Calculator, 180,000 plus 10,028 gives me 190,000, 028. So let me deduct this from my profit. So minus 762, 800 gives me 572, 772, right? So now that I have this, then I can begin to add back. I'm going to add back disallowed expenses, right? Or expenses that are not allowable for company income tax purposes. So we've done all the hard work. It's just time to reap the benefits of our hard work. Let's just go through the question and pick what I said. If you remember, I think we did the marking here. I said research and development will be allowable. So we will not disallow this. We'll let the 15,000 stay within this. Legal cost has been added already. Remember I said the donation is allowable. Depreciation is disallowed, right? So let's add back depreciation of what the cost is here, 57,000. So we add back 57,000. All right, replacement of motor vehicles costing 51,000. Good. If you remember, when we came here, we said here the amount to be capitalized is what? 33,663. And indeed, we came here and we capitalized what? 33,663 under class 2. If we have capitalized 33,000, it means we have added it back here. We must disallow it here in the profit section only to give capital allowance later, right? So what's the figure again? 33,663.01. Okay, so 33,663.01, and I'll call this what? What should we call it? Disallowed repairs and, let me write this well, and improvement expense. So I disallowed this, I added back to this. What else do we have here? Apart from this, what happened? They said what? There were exceptional costs of 150,000. Good. Production manager was incapacitated. 35,000 was what? Made to the injured person, so we let that go. Remember they said 110,000 was used to buy computers, additional computers. So additional computers, we have to add it back. It's disallowed. Additional computers of 110,000. Why am I saying this? Do you remember we added it to our class 1 here? Okay, this 130 here comprises two things, right? This 130 here is this 110 from here plus what, my 20,000 from here, right? So I need to disallow both of them. So my 110 will be disallowed here, right? I need to disallow this 110,000 and then also disallow the 20,000. So I add back my 110. Then I also come here and say computer server is also to be disallowed. Computer server of 20,000 will also be disallowed. But we are not done. Don't forget that there was some 5,000 amount here which represented the fine they were imposed. I told you we need to what? Fines imposed must also be what? Disallowed. You can't allow it. So 5,000. Then don't forget, we can't forget this. Remember that even in as much as we are allowing the research and development, the 80,000 cost here, this figure here, which is the 75 plus the 5,000, was sitting within P&L as an expense. So if we've granted capital allowance here under class 5, let me show you, under this 80,000 right here, if we've given this as a capital asset or a depreciable asset, then we must clearly add it back to profit to be fair, right? So we can just say trademark, this is the total, will be what? 80,000. Or if you want to show your examiner that you know what you're doing, you can break it down into what? Trademark cost 75 and then what? Trademark legal. Let's even do it that way. So trademark cost, it cost us 75,000. Then what? The legal cost was 5,000. So trademark legal is what? 5,000. Oops, what am I doing? All right. So we can comfortably sum our add backs now. So 57,000. I need your help. Calculator, 57,000. So let's add together. Plus 33,663.01 plus 110,000 plus 20,000 plus 5,000 plus 75,000 plus 5,000. Did you get 305? 663.01. That's what I got. So we can say our adjusted profit will now be what? Okay, we have 572 from here, this figure. So we're adding, so plus 305, so plus 572, 772 gives me 878,435. So this is my adjusted profit. Now that I have my adjusted profit, remember that capital allowance of 2017, what did we get? We got a figure of what? 355,076.8. So I less capital allowance, less capital allowance, which is 355, to be sure I got it right. 355,076.8, okay? 076.80. All right, so this is my capital allowance. Then remember that we still have profit, because what I'm envisaging is that if I deduct my 355 from my 878, I will still have what? Taxable profit. Do you remember there was a loss we made the loss we could carry forward because we're a manufacturing company. So there was a loss here of what? 150 at the top here. This thing I'm circling 150, 200. That we need to also what? Deduct. So we less let's even use what the law uses. Let's call it unrelieved loss to carry forward. So the amount is what? 150, 200. Right. So we can have our chargeable income from business, right? So from business, that'll be my 878,435 minus 355,076.8 minus 150,200. That gives me 373,158.20. Now this is my chargeable income from business, right? All things being equal, you could have applied your tax rates and go your way. But remember that we actually have the interest income. Do you remember? The gross interest here. I told you that interest attracts what? A withholding tax, which is on account. It's not final. What that means is you need to add the whole amount to your income, tax it using your normal rate before you go for what? A tax credit for the withholding tax you suffered. So here we need to add what? Let's add I need more space. Good. Let's add gross interest income. How do you gross? Very simple. For those who don't know, you can do if more or less divide. So they are saying that the interest income is what? 10,028 after deducting 8%. So that means what you received is 92%, right? So if 92% is what? 10,028, then 100% will be what? You can find for solve for x. But I can do just 100 divided by 92. What people call if more, let's divide. So 100, calculator, over 92 times 10,028. This gives me 10,900. So this is the working. I have 10,900. So this is my gross interest income amount to be added. Let me add everything together. So this 10,000 plus 373,158 point, what did I get? 20, is it? Yeah, this is 0. Gives me 384,058.20. All right, so this is our chargeable income. Then we say what? Tax at which rate? Remember when we started, I said because they are manufacturing companies, so right here, manufacturing company located in a regional capital, their rate will be what? 18.75%. So tax at 18. Oops. At 18.75%. What does it give you? So 384 times 0.1875 gives me 72,010.91. So this would have been my tax to pay. But remember I told you that this gross interest income figure here, you already suffered 8% withholding tax on it. And actually, they said what you received was for 10,280. So if what you received is 10,280, 10,028 from here, then we need to what? Say this tax of 72,000 here, right? We'll say less what? 8% withholding tax on interest. Because it's on account, you already suffered the withholding tax. You must only get what a credit for it. It's only fair. So there are two ways to do it. Either you find 8% on this 10,000 here, or you subtract the 10,900 from the 10,028 here. The difference is what the withholding tax is. So either way, that works for you. It's fine. So I'll just say 8% of the gross, this figure here, of 10,900 will give me what the withholding tax is. And as you can see, it's what? 872. So it means what you paid is 872. We are giving you a relief. So final tax liability, your tax liability will be what? The difference between, so minus 72,010.91. I have 71,138.91. So this, ladies and gentlemen, this is my tax liability for the year. So we have come to an end. Obviously, if you want to show off, you can tell the examiner that the gross rental income, they are saying what's your tax liability with respect to this. What did the question say? Let's take a look again. It said chargeable income and tax payable, right? So this is what they will pay. But you can also make a note here. Let them know you know your stuff. So we'll say the commercial rental income was a figure of Ghana cedi 180,000 would be subject to a final withholding tax of 15%. You can put into bracket what the figure is. So let's find 15% of 180,000. That'll give us what? 27,000 Ghana cedis. Let's say what? Separate from the above tax liability of Ghana cedi. What did we get here? 71,138.91. We are done. So if you can do this, dear viewer, on the exam, you are 100% going to score full 14 marks, and your examiner will be pleased with you so much. He will look for a way to give you extra marks. So that brings us to the end of this quite a long session, but it's been worth every minute of it, I believe. So take some time to go through this personally, solve it yourself, download the question in the comments and the description box and try it yourself. And you can see there are so many learning points here. If you can do this very well on your own from beginning to end, trust me, on the exam day, you're not going to struggle too much. I'll come your way with another question on company income tax to test different areas to make sure you are stronger before you sit your tax exam. So as always, if you love this video, please don't forget to smash the like button. It matters to me more than subscribers, right? So smash the like button, and don't forget to share this video within your entire network. I'll catch you in my next video. Enjoy the rest of your day. Bye.